Today's video is gonna be absolutely bonkers. We're gonna take a look at a pretty cool map on whether or not your state, your city is already experiencing a cooling down. So this map is particularly helpful if you're not watching your housing market every day and not keeping an eye on inventory. So really cool map. And then we're gonna look at another map at what has happened to housing inventory over the last 3 years. So first map we're gonna look at the nation as far as inventory and what has happened in the last 6 weeks, and then we're going to go to 3 years. But it's really astonishing what housing markets are actually getting a surge of inventory and which housing markets are not. So I feel like you guys are going to, get a lot of value from this video. I really hope you do. Now remember, you guys, I'm not a financial advisor. I am a YouTuber just sharing my opinions. I do have experience in real estate. And please, guys, if you can, please like this video, subscribe to my channel if you haven't already, and as always, comment. But we're going to deep dive into an article from Fortune titled "How Fast Your Local Housing Market is Cooling Amid the Great Deceleration as Told by Two Interactive Charts." Now, you guys, I love what they're saying, which is the great deceleration, which is exactly what happened, right? That's why I always say a rug pull, because these actions not only happened so suddenly, we were not properly warned. And I believe we weren't properly warned because they were too late. The Federal Reserve should have taken the measures that they're taking now back in 2021 and prevented a lot of the whiplash and a lot of the suffering and a potential crash that we are fixing to go into. Now, I hate using the word crash because the definition varies so much. And if you don't believe me, go to my community and look at the last poll that I did asking what the definition of a crash is. It's so split. So we're going to say negative equity growth because that's what we're talking about. We're talking about loss of equity, so negative equity growth. But either way, you guys, let's get started on this article right now. All right, so let's read a little bit of this before we actually go into the map, y'all. Now, here's how the article starts. As housing data rolls in for April and May, it tells us that the housing market's unprecedented acceleration, which saw a record 20.6% year-over-year jump in U.S. home prices between March 21 and March 2022, is either on pause or over completely. In the coming months, don't get confused by lagging home price data. All signs, I repeat, all signs point to a slowdown in the rate of home price growth. At Fortune, we've dubbed this shift the Great Deceleration. The driving force behind the Great Deceleration is the Federal Reserve. Over the past 6 months, the average 30-year fixed rate mortgage has spiked from 3.11 to 5.09% as the Fed has moved into inflation fighting mode. Of course, that not only prices out some would-be buyers, but also sees home borrowers who must meet lenders' strict debt-to-income ratios lose their mortgage eligibility altogether. Rug pull. It continues. The biggest indicator of the cooling comes from the housing market's premier leading indicator, which is inventory. And here's the cool thing, guys. Inventory is up, and I just made a video. Inventory is up month over month, 26%. Booyakcha! 26% increase of inventory month over month. Thank you very much. The article continues. The pandemic's housing boom saw inventory, the number of unsold listings, fall 4-decade low. By March, nationwide inventory levels on Zillow were 64% below March 2019 levels. But as mortgage rates approached 5% this spring, inventory levels began to rise again. Indeed, between March 26th and May 7th, nationwide inventory levels rose 10%. So I'm looking at the entire May, right? So from April to May, it actually rose 26%. Look out for that video. It's probably been already posted. So I absolutely love the great deceleration that they're saying. But the thing is, guys, I think all of this is what it's really showing is how weak our housing market really is, right? Our housing market could barely handle these changes and the Federal Reserve's action to fight inflation. It could barely handle this already unraveling. So to me, this is all pointing out how weak our housing market really is and how actually the bubble was created from the Federal Reserve and COVID and lockdown, stimulus, free money, cheap money. Now that free, cheap, easy money is gone, what do you think is going to happen to the housing market and how fast and how big will it fall, right? How much is it actually going to fall? We don't know that. I don't even know that, because what I really don't understand is what's going to happen when we can't do quantitative easing to soften the blow. I don't know, but I'm also worried that in 2024, the Federal Reserve is going to reverse direction and possibly create an even worse situation. So there's a lot of unknown factors. Regardless, let's take a look at the map right now. So here's the map right now, and this is how much inventory levels have shifted over the past 6 weeks. Okay, so if it's in red or orange, it's negative. It's in blue, it means it's positive. So what I want to point out, guys, is look at the West Coast. So in the last 6 weeks, right? Last 6 weeks, look at all of the West Coast cities that are getting a surge of inventory. This is astonishing. And look at this little area right here. That's a massive inventory surge right here. So this is kind of a surprise. And look at the East Coast. Along the East Coast, they're getting inventory surges. But here's what I also noticed. Look at Texas. There's a lot of places in Texas that, according to this, we're still losing a little bit of inventory. Now, Houston, actually, this is a lagging information. Houston's actually up 5%, not down like this implies, but it's very interesting. Now, look at the Austin areas, Dallas areas. Look at that. Inventory surge. That's not good for them, especially because they're overvalued. But what I want to take a look at also is Florida. I was surprised to see that almost the whole state is getting more inventory, but look at Southeast Florida is actually still losing inventory. So for my subscribers that are in Florida, I want you to comment below if you're in Florida and tell me if you're finally starting to see inventory, because one of the biggest things that I get from people from Florida is we still don't see inventory increase. So it actually is increasing. So I want you guys, if you're in Florida, jump on Redfin, jump on Zillow. Actually, you know what? Don't even jump on Zillow. Just jump on cannot stand Zillow. Jump on Redfin and go in and see if there actually is more inventory. I'm not saying good deals, right? I'm just saying more active listings, but that's very intriguing. East Coast doing well, West Coast doing really well, but some of the southern states, some of them, according to that map, still losing a bit of inventory. Very astonishing, but Florida's coming back. Texas is coming back. These are all great signs that we need to see so that we know that we are shifting into a buyer's market. It's going to crash, but we're shifting into a buyer's market. Take a look at this other map. So here's another housing map. Now this compares over the past 3 years. And here's what this says. While inventory levels are rising fast percentage-wise, that's awesome, right? Inventory levels rising fast percentage-wise, they're still far below pre-pandemic levels. Look no further than Cordialon, which saw inventory spike 54% between late March and early May, as it went up from 242 to 373 in active listings. However, that's still 62% below the 980 listings it had the first week of May 2019. Simply put, even though the great deceleration picks up steam, it will still take time before we're back to pre-pandemic housing market. And I also believe in that. But this is astonishing. Look at this map. I mean, now we're getting a huge influx of inventory on the West Coast, but look at how much inventory they lost in the last 3 years. That's crazy to me. And look at Florida. Same with Florida. Texas, right? A lot of people moving to Texas, a lot of people moving to Florida. Obviously, the East Coast is always super popular, but this is very intriguing. This area actually got more inventory, as did this area in Texas, and I'm probably assuming because the job market is horrible. But that's really interesting to point out, you guys. Now, I do agree with the article in that we're not at pre-pandemic inventory, because we're not. Pre-pandemic inventory was about 1.1 to 1.5 million active listings. And really, that's what we need to get back in order for us to kind of go back to normal as far as an inventory standpoint. Let's finish out this article right now. The housing market is still savagely unhealthy because of total inventory levels in America. In order for us to return to a normal housing market, his economic models show we need to see a national inventory rise to a range between 1.5 and 1.9 million units. I don't agree with that. The National Association of Realtors' latest reading has inventory at just 1 million units. Okay, I understand this. So this is counting inventory of houses that are under contract that have not closed yet. I'm looking at active listings, not pending listings. So this is taking into account pending listings as well, which I don't think that's a good idea, but whatever. Heading forward, His biggest fear is that mortgage rates begin to fall again and the momentum is lost. If that happens, the great deceleration could get put on pause. While I'm very encouraged that inventory is rising on a year-over-year basis, we need it to stick and head a lot higher. My concern is in the future, if rates fall again, some of the inventory gains we had will go away. All right, guys, so I'm going to finish out this video with some conclusions that I gained from reading that. And here's what it is. If you're like me and you've been watching this channel, you already understand my narrative. All of the signs, inventory, prices, sales, demand, all of the trends, all of the things that we need to see for the market to shift back into the buyer's market is happening, and it is happening very quickly right now. But my concern is, okay, probably my biggest concern is the Federal Reserve reverses course. Now, I think that's most possible to happen in 2024 because of the election. That's why I can't really forecast past 2023, because the election years freak me out. How could they not? Look at what happened the last election year. Complete chaos. So as long as the Federal Reserve doesn't reverse back, I think that 2023, possibly at the end of 2022, some of the best buying opportunities. But the thing is I am not going past 2023. I'm putting a lot of my eggs in the 2023 basket because I don't know what's going to happen. And I don't know if the Federal Reserve is going to reverse course in 2024. Other than that, guys, thank you for watching this video. Thank you for taking this journey with me. And if you're out there investing in real estate, I do wish you luck and I hope you win.